right, guys, we're going to get into the market. We're going to see where things are going. We're kind of evaluate the market as a whole and kind of, this recent up push, aka, I did talk about this, right? That the market maker could end up kind of swinging this thing up before it swings it down. So if people were paying attention to my videos, they would understand that and they would already know where the market is heading and what was going on. So on this next move, basically, I'm looking at a triple stick candlestick pattern. We'll kind of talk about that in just a moment in the video. All right, guys, this portion of the video, we're going to kind of get into what's going on right now with the current market, where things are, and what just happened in the current move. I know a lot of people are like looking at this like this, guys. Look, watch me. Bull run, bull, right? They're also going like this. Look at this massive move for Bitcoin, massive. I can tell you this, like the move is big, right? We'll take overall, and we'll say this single move 2 days, 15%. 15% in the crypto market, we can say it's big. We can kind of say it's normal, right? These things run up, they run down. Current scenario I'm looking out to play out right now is this candle close on this third candle right here. So typically these candle closes and stuff like that, and the way these candles work, it is usually we like to stick to the laws of three. So laws of three means basically that, are we looking to trend up or are we looking to trend down? What's going on right now? So we basically got 1, 2, 3 candles, right? So this is our day 2, this is our third one. So what we could be seeing here in reality is one or two things. We could be seeing the market looking like this, where basically and we can kind of see where this thing flipped, and we kind of saw that was going to happen. Again, not a big deal to me. I'm waiting for a proper entry. So we'll see where this thing kind of goes, but you can see right here, we basically came back to the fib, retested on the fib, and now we're kind of playing in this zone right here. So we did come all the way down here, and now we're currently up here. So technically speaking, we could say we're in an uptrend, right? When we look at it from the overall perspective, and we look at previous charts and kind of what we had set up for previous charts, we could say, okay, we're in an uptrend, we're not in an uptrend, so on and so forth, right? I would say right now we're kind of semi moving into what can be considered an uptrend. And you're probably like, well, how did you set up your fib? I basically took my fib and I went from bottom, right? Bottom of market, where our original flip was right here, to our top of market, which was right here. From there, you can see all the supports and resistances over time in perfect symmetry with where moves were made basically by the market maker, right? So we basically had the market maker come over in January. They ran the market down, and they ran it up. They played the top, ran it down again, and you see support, right? We can see where it broke support a little bit here, kind of indicating it was going to break down more. And we can see right here, perfect support, right? Support right here is really good. If we look right in here, again, support, right in here, support. We can see that same support across here. We can also see that same resistance across here and support down here. So with that being said, we're going to see where the MM ran the market up, ran it all the way back down, and then ran it up again to be able to finish out this leg, and then ran it back down, obviously, into our ABC formation here. So that's basically a 0 into an A, into a B, into a C, perfect ABC formation. And then they decided they wanted to go ahead and run it up again. And they basically ran it in a wave movement to the upside, right? So we had our ABC correction into our wave movement to the upside. And then we had much more than just, we can say, an ABC correction over here, right? Because we basically had, well, we could say a 0 into an A, into a B, into a C. And then we had basically the same thing over and over and over again as the market was kind of figuring out what it wanted to do. So 0, A, B, C. And then basically what we have over here, what I think is going on right now, again, is 0, right? A, B, and potentially C, right? So if we get another ABC, we're going to end up in this 30K zone, 29K zone. Be extremely careful with this market movement. It can't be any more obvious, guys. It can't be any more obvious, right? If it doesn't end up fulfilling this ABC pattern, what we'll probably be looking for is we'll probably be looking for this thing to start legging up, right? So If it's not going to follow the ABC here, what I would consider canceling the ABC is if Bitcoin ran up here, which I think it would then reject, right? Because we're hitting really good resistance, really good support, and really good resistance, right? So if Bitcoin is to come up here and even playing here, that ABC is now canceled. No more ABC for this movement right here. I would then consider a move like this, and I would consider that we've found support. This was our bottom. We found support, and then this right here would be our new accumulation zone, right? So this accumulation zone would then have to confirm, but until it confirms, you could basically, not saying to do that right now because we don't know if this will turn into an ABC, but if it breaks out and rejects, then your buy zone's here, your sell zone's here until we break out of the zone. And then it flips, and if we go up, then your sell zone's here and your buy zone's here. If we go down, then your sell zone, your buy zone's here and your sell zone's here. And this is basically how you guys have to play. You got to understand they're going to play these zones, right? They're obviously going to have a middle to each zone, right? Also, in addition to that, but this is kind of what I would look for in the current market and the way things are heading. So right now we're moving into what I would consider a triple candle scenario. We need to see this daily close. This daily close is here. I would go ahead and take the position that we're probably going to dump, right? And I can show you some candlestick patterns that kind of support that. I can also show you, this little bit of move right here, guys. This little bit of move did all this on the RSI on the daily. If it did all that on the RSI on the daily, how much more room do you think we had to go up? Maybe to there, if it can, right? But if we close a 3 candlestick here, I'm going to expect a trend reversal, basically, for the market as far as candlesticks go, right? It's because we can't form a higher high. We've had confirmation multiple times to where the market has not decided it wants to go higher. It can't break resistance. And what happens when you can't break resistance? You come back, right? So that support zone that I'd be looking for is right around here. I think the 38,775 would be good support if they're looking to continue trending up, right? So this would be a good DCA position on a lot of coins. And then I would expect it to find support here to trend up. If it can't do that, what I would expect is I would expect the market to come down, break here, bounce, come back, break it again, come down. And if we start breaking out here, we're probably going to go ahead and break into this lower zone right here between the 35 and the 30K zone, right? So keep an eye on it. Don't get too bullish. Don't buy the top of this, guys. It makes no sense to buy the top of this. This thing, even if it blows up, it's still going to come back, right? So just wait for confirmation. Confirmation will give you the position you're looking for to enter. That's what I would look to do right now in this market. All right, let's go ahead and get into the candlestick patterns. I'll show you kind of what I'm talking about with a triple stick in just a minute. All right, we're going to go ahead and we're going to get into some candlesticks patterns. This is very elementary, I would say, as far as candlestick patterns go. And this site is called babypips.com. It's a school of pipsology, elementary. Triple candlestick patterns, basically how this works is, these are basically indications of, are we going to go up or are we going to go down, right? So I would take this right here and you can see we basically have the evening star and the morning star. That's basically where the market kind of trends down. It gets this little doji right here that's kind of split, undecided market. And then it gets another green candle over here, right? Kind of indicating, hey, we're going to pull up and then we're going to pull back and then we're going to pull up again. So this is indicating a reversal to the upside, right? When we're looking at an evening star, it's the exact opposite. So it's basically where the candlestick comes up and then goes into the smaller version right here, getting a little doji, and then pulls back again. And then it's kind of signaling a reversal, right? Now, does that reversal necessarily mean that the trend is not finding support to continue up? No, it doesn't. That reversal could simply mean that we come down to a new support, which is basically what I showed you guys in the other charts that I pulled up as far as Bitcoin goes. So these are just two of many. Another one here is called 3 white soldiers. So it's basically an indication of 3 candles to the upside, indicating a trend continuation, and then to the upside. And then we've got what we like to call 3 black crows, which is indicating a continuation to the downside. Now, Bitcoin on a bigger perspective, if you go to the monthly, is actually showing a 3 black crows scenario. And I'll show you that in just a minute. It's very interesting, and I'm kind of curious if that's going to play out. All right, so moving down, we got 3 inside up and down. So this is what I think is currently going on with Bitcoin. So we basically got the candlestick patterns up, right, or down, and then we got the indication of 1, 2 positive candlesticks up. Now, the issue I'm having right now is we have the 3 inside down. So the 3 inside down, we have the green candle, then we have the red candle, and so far this candlestick right here is green. Now, if this candlestick closes green, I would expect them to try and run the market up. And when I say closes green, it needs to close green and try and exceed previous heights on the other candle. If the candlestick closes red, right, and pulls down and closes that way, I'll expect further downtrend to find support, aka a good time to short the market or take and wait for a position for a good DCA position to enter the market. This is what I'll be looking for a market entry on a lot of my stuff. So if we end up getting that pullback, again, my DCA will enter here, and my DCA will continue to keep entering in key areas until I'm fully dialed into the market at a certain point, whether we're in a bear market or a bull. Whenever we're running up, I'm not looking to dial into the market at all, guys. Like my buy-ins stay out until we come down and find support. Now, you're probably like, what were you talking about with the 3 black crows? With the market and stuff like that. So let's look at that real quick. We're gonna go ahead and we're gonna go on the monthly. We're gonna close this out. And if we look here, as far as the market goes, we've basically got 3 black crows, right? 1, 2, 3. What do we have here on the right here on this month? Well, we have a green push, but that doesn't mean that this can't just shut down immediately, right? And close small, just like what you saw with 3 black crows, and then the next month dump, and the next month dump. So we need to really pay attention to what's going on. And there's a lot of economic issues right now going on too. Actually, the Bank of England just recently announced that they're going to go ahead and they're going to raise their rates 50 basis points. That's a 50%, 50%, right? 0.50% raise on their interest. That is a very aggressive move for the Bank of England. What does interest raising do? It increases the local currency and it incentivizes selling risk assets, high risk assets, stocks, so on and so forth, and dialing your money into dollars and bonds and things like that, because they're gonna hold more value than the other assets. So you'll see people start to do a sell-off on the market, and you'll start to see people dial into safer assets that are more government controlled. While a lot of people are like, oh no, this is the future and everything like that. Yeah, it is, but we have to be realistic about economics, right? With the upcoming Fed meeting, while a lot of people are anticipating some kind of positive news because everything looks positive economically, technically, when the economics are looking positive, it just incentivizes even more that they can come in with these aggressive rates and just rate hike really heavily right at the start, right? And just be super hawkish, super aggressive when it comes to that. So I would be anticipating myself that with all the positivity we're seeing in the economy, that this is going to, especially with our inflation still climbing, guys, still climbing. We're at 7%. And I think we'll probably be at 7.5 or 8 by the time March comes around. We'll probably see the Fed move very aggressively on that. And the Fed will probably step in. And what he'll do is he'll go ahead and he'll probably end up raising rates at a ridiculous amount, like even 50% or 0.50, 50 basis points, just like England or more. Because you have to keep in mind too, if other countries are already starting to try and get their inflation under control, America has to stay competitive. And for our dollar to stay ahead of all the rest, we have to keep up and do the same things other countries are doing to be able to make that happen. So with that being said, you can make your own decision. I'll be waiting on a market entry though, for the most part, majority of my capital until after that Fed meeting. Once that Fed meeting is confirmed and we kind of see market direction after that Fed meeting, that's where I'll kind of take my position on, okay, the Fed's being hawkish, or maybe the Fed's not being hawkish. And at that point, I'll decide, okay, where's my good entries, and I'll enter the market, or I'll wait for more downturn, if it's extremely bad also in addition to that. All right, with that being said, that's the current market update. I hope that helps everybody kind of find a direction, understand what happened and what's going on, and find a good entry for your positions if you're looking to get into this current move on the market. Again, I would try and be very safe about it under the current circumstances with what all is going on with the market and what all is going on economically. Zoom out, look at the bigger picture, guys. Don't get tied up in a green candle and like, oh my god, I'm gonna miss out on all these gains. Losses to the downside are much more significant than gains to the upside, so keep that in mind too. All right, until next time, guys, see you later.